For Am I Rich? And today we're going to talk about stock ticker symbol 8028. This company is called FamilyMart and it's on the Tokyo Stock Exchange. So I'm talking about the stock because I was talking with a friend recently about Japanese companies, and I remember back when I was in Japan I was really interested in I really enjoyed going to the convenience store called FamilyMart, so I was kind of wondering how they were doing, and so I checked their stock price, and in the last year they have nearly doubled their stock price, which is pretty amazing for a convenience store that's been around since the 80s. So I wanted to look into them and kind of see what was going on and what was it all about. So FamilyMart, a couple of years ago, they bought UNY Holdings, or merged, basically an acquisition, and that made them the second biggest convenience store franchise in Japan. They also have convenience stores in Taiwan, and they also have convenience stores in the Philippines, and they also have convenience stores in Thailand and Vietnam, I believe. So they have a lot of convenience stores, especially in Asia. And I don't know about their new symbol, now that they're FamilyMart UNY Holdings. They have this kind of weird FU symbol. Not sure if they really thought about that too much. And also their websites, if you want to check them out, it's FUHD or fu-hd.com. So yeah, kind of I don't know about the marketing there. It might not be in North America for a while. But anyways, the stock price currently sits around 12,440 yen. And the price to earnings ratio is 61. And the forward PE ratio is 30. So price to earnings ratio of 61 is pretty steep. This is, you need to imagine this is like Amazon or Netflix. Maybe it's something everybody loves, so they're willing to pay a premium on it, but you're paying a lot for what kind of money it's bringing in. That said, its price to book ratio is 2.5, so it has a lot of asset or equity to it value. So 2.5 is kind of average, I'd say. It has a dividend of 1% at the moment. If the stock price drops a little bit, you might get a better dividend on there. And they are a fairly consistent raiser of their dividend. And over the last 5 years, it's had a growth rate of about 6.8%. This might be a little bit slow because of the whole merging of the two convenience stores or brands. And they've had to rename a lot of convenience stores. I think they had Circle K convenience store and a few others. They had to make those into FamilyMarts. So that's been a big issue there, I think, for growth. So you could see this improve in growth. And I think the reason it doubled recently is basically because the management came out with a plan that they think they can improve their return to equity from about 4.5% to 10% in 2021. So if that happens, you're looking at at least doubling their earnings. So if that happens, you get a PE ratio a little closer to the 20s. So that's probably more of a realistic kind of price. But and they might be able to grow even more, and if that's the case, then it could be worth it. So is this a buy? Because it has shot up so much and it is dropping. Now, I kind of think that if they accomplish their goal of growing this company, then 12,000 yen might be realistic. That said, that doesn't give much margin of safety. So this company right now, as it sits, it's kind of, you'd have to kind of buy it for love. I don't know if you'd really want to buy it for its growth potential, especially a convenience store. Probably it won't grow as fast as like a high-tech company. But that said, it's also probably a lot safer because convenience stores are fairly well entrenched, especially in like Japan or some other Asian countries, or even maybe Europe, where you have a really tight population density, where there's not a lot of room for like big box stores. And when you just walk out of your house, it's so convenient. There's so many stores you can just go get something from. A convenience store makes a lot of sense in these places. So I see this as a very stable company. Just at the current price, I don't know like if they can continue to grow in the future, maybe it's worth it. But right now it's really up in the air to see if this is really worth anything at the moment, or like worth what it's being priced at. One other note is that I believe at their next annual meeting, they're going to, their financial year ends in the end of February. So I don't know when they announce their financials, but that might be March or something like that. But when they do announce, they're planning on also splitting the stock, so the stock price should go to a quarter of the price. So if it's at 12,440 right now, it'll be like 3,110 or something like that, if it stays the same. So yeah, if they can improve that growth a little bit, then yeah, you could see even bigger growth, and you could see this company being worth even more than they say. But that's it's really up in the air. I think it's very possible too that they might not hit their numbers, and in that case, the stock could drop. It's been kind of in a downtrend already. I think it got quite a bit higher than it was maybe 16,000 yen or something. But yeah, I think 12,000 yen, if they can pull off their goals, then that's probably a reasonable value. Maybe because it's the second biggest convenient chain around now, it might be worth a little bit more of a premium, but that would be totally an individual decision. And as far as an investment right now, I personally would hold on it to see kind of what happens in the future. I believe they probably have a good chance of doing their growth strategy, but at the price it's at right now, and if it dropped significantly, like right now, if they didn't pull off their plan, I'd see this fairly valued, probably closer to 8,000 yen, or maybe maybe 9,000 if you're lucky. But if it dropped below 8,000, then it'd be an interesting kind of stock for me. So yeah, curious if you guys have heard of FamilyMart, if you're interested in FamilyMart, or if you think FamilyMart's a good buy. Feel free to leave comments in the doobly-doo below. And other than that, thanks for watching, and we'll see you in the next video.